Kenyan elections are just around the corner and should take place on the 4th of March, but previous elections have been marred by violence and businesses are looking to protect themselves. Jeff Vincent, who's underwriting officer at African Trade Insurance, joins us now for more detail. Vincent, thanks so much for joining us this afternoon. We've got about, 49 days to the elections I came across some commentary, Jeff, from Ali Khan Sachu of Rich Management a little earlier today, where he's highlighted the fact that we've seen Kenya fumble through 3 out of 4 of the elections in the recent past, the blowback being dealt to the economy in 1992, 1997 and then the 2007 and 2008 period, and that blowback was brutal. With that in mind, just how nervous a scenario are we looking at when we're approaching this year's elections?
Sorry, your question is how are we looking at the election?
At the moment, just, to what degree or what degree of nervousness are we looking at as we approach this year's elections?
I think it varies very much from one person to another, from one area to another. When we look at the business we see, there has been an increasing awareness of the of potential problems that would come during and especially after the elections. So our business is to protect investments, to facilitate trade, and in general it's business as usual. Yes, there's an increased attention. The area that has created bigger demand for our products is political risk, terrorism, political violence. And there, I have the impression that it's more a caution. People are more cautious. I don't have a feel of panic, really. I think compared to the previous elections, a lot of things have improved. And it's more a matter of risk management than scramble and what's going to happen.
Yeah, just taking a look at the scenario, you highlighted that there's increased awareness, there's a lot of caution about, Jeff. So how are businesses working to mitigate against some of the risks that could potentially come along?
Well, you have to make an inventory of all the potential problems that come with can come with the change of government. Most of the businesses we're dealing with, for instance, are suppliers to the government, and there has been a tradition in some African countries that if there's a change of government, the new government will have a tendency to postpone payments that were for contracts that were awarded, will question whether the contracts have been awarded in a legal way, etc. So it's not a concern about political violence, it's more about the payment behavior of the future government. The other type of risk we're looking at is where the economy as such, due to whatever might happen after the elections, starts to collapse, so that the income tax revenues would go down, so that the government would have problems to meet its international obligations, that some companies would have problems to repatriate their investment in hard currency. So it's the variety of risks that we are covering and the interest that clients and banks have in protecting this is increasing across the border. But that started last year, really.
Mm-hmm. Have we seen that translate to the cost of insuring business as well, Jeff? Because, of course, this is a high beta, high impact event that comes with considerable risk. And as a business yourself, you've got a safeguard to an extent. So what kind of premiums are we looking at where businesses are taking up insurance?
Okay, now there I have to make a distinction between different products we're covering. When it comes to normal credit risks, we're insuring banks, we're insuring companies against the risk of not being paid by their clients. Pricing has been stable. When it comes to the general political risk insurance, that is the risk that the government will confiscate, nationalize assets, that the government will not pay its debts, that the KPLC, for instance, will not honor its long-term contracts with companies that deliver power. I think all that has been pretty stable, and I think that ATI as a company has been very, very instrumental in that, because that's our mission also, to keep the confidence of the markets. When it comes to political violence, there we have a different story. First of all, the demand for this protection has surged. So there we speak about the risk of destruction of assets. That can be hotels, can be factories, can be whatever. And also the risk of losing income because due to the political violence, the companies cannot operate in a normal way. There we have two mechanisms. One is that the demand has increased dramatically. And on the other hand, as these are big chunks of risk individually, we cannot insure them all by ourselves, so we have to go to the reinsurance markets. And there, especially in the European, the London markets, the capacity, that means the willingness of reinsurers to take on part of the risks has reduced. And that automatically has resulted in an increase of prices that I would probably assess at 30-40% in general. But for some key risks in very critical locations, the price can have gone up by more than 100 to 100%.